Hi, everybody. Lauren Swigart with Supporting Strategies. We are a remote outsourced bookkeeping through CFO level service for growing businesses, and we support the American Institute of Architects here in Los Angeles and have for years doing their bookkeeping and accounting work. And so we're very happy to be here with Yuko to share some ideas with you. And one of the things that kind of separates us from a kind of mom and pop bookkeeping is, and I'll keep it specific to architecture and engineering firms. A lot of architecture planning firms, of course, work with BQE core software for time and billing and project management. Core also has an accounting general ledger system built in, but some of the workflows are very clunky and old school. For example, Core requires you to print actual paper checks to print, to pay your vendors through the system. Tedious manual process, requires people to be in person to print, sign, et cetera, mail the checks. So we are all about streamlining processes. And so we've developed an API tool that enables our clients to connect Core directly to bill.com, which digitizes the accounts payable process. So it makes it much, much more efficient, tighter controls around company cash, giving them flexibility to approve vendor payments, and from anywhere. You don't have to be sitting in an office to do that. So I don't want to belabor that, but that's just one example of how we work with our clients to bring efficient and best practice solutions to optimize business workflows. So that's it. Looking forward to hearing Yuko's ideas on R&D tax credits. So I will turn it over to her.
Perfect. Thank you so much for having me, and thank you for the introduction to Roland. And I will go through how I work with Roland's firm Supporting Strategy, and how we enhance our services to his clients and our partners. So we will go through that, and let me share my screen so that I can begin my presentation. Can everybody see this okay? Okay. So I just wanted to go through our goal today. So the one of the reason I think there are a lot of misconception in accounting and tax world is you have to rely on one CPA. So I'm gonna talk through how to build a very good team through bookkeeping firm to fractional CFOs or tax CPAs and tax specialists, so that you can maximize your future in tax planning or tax savings. So my name is Yuko Tsuchida. I am a California CPA, and I also have MBA from Master in Business Associate Administration. And I start my career with Big Four accounting firm called KPMG, and I was there for a couple of years. And then I had two successful CPA firm I started. And first one, I started with my partners in 2008 and had a very successful exit in 2016. And last 15 years, I've been specializing in solely for tax credits, including R&D tax credit, employee retention tax credits, California competes, and any state level tax credits. So before we jump in, before I introduce you to my tax manager, I wanted to just give you background, how I get here and why I started my company. So whenever I was really little, I really loved math, and I even competed in abacus competition. And also back in Japan, I grew up in a family business where my parents had a construction business. And during this time, I witnessed financial difficulty and my parents struggled through that. So around age 14, age 13, I decided I wanted to become an accountant to really help business owner like my parents. And first for a couple of years, I started my career with Big Four accounting firm, where I prepare multinational tax return for large automakers and Japanese company who had presence in United States. I learned a lot, and it was really fun, preparing tax returns and learning about different issues and problems and how to overcome that, how to present people in audit. But I just didn't feel like, I was helping business owner like my parents, which was small to mid-sized firm. So I decided to leave the firm and transition to like more consulting role. So whenever I started my first businesses, we are a very small firm and we couldn't do it by myself. And even like we had a team, we grew and like we had a team of people. It was just so difficult for us to do tax returns, do tax credits, to everything. So my focus really became tax credit, tax incentives, and aligning ourselves with bookkeeping firm or CPA firm to enhance their service to our clients together. So I can do what I love to do. And then they're really good at traditional CPAs are much better at looking at every issue and how to prepare tax returns. So that's why I started this company to really focus on tax credit, tax incentives, and thinking with getting together with our team of advisor, including bookkeepers, bookkeeping firm and traditional CPA firm to really how to help our clients looking back and looking forward, save taxes. So that's what we do today. So Kelly, would you like to introduce yourself?
Yeah, hi everyone. Thanks for joining us today. I'm Caitlin Collier and I'm the tax manager at Hito. I work with Yuko. And I have over 5 years of accounting experience. I started my career at PwC, PricewaterhouseCoopers, and I did some compliance, but quickly switched into tax credits and incentives. And that's where my passion really lies. I am a Colorado and Texas CPA, and I have my Master's of Science in Accounting and Taxation and Consulting from Texas A&M University. So my specialties include the R&D tax credit. That's where I've spent the majority of my career. But then I've also done work in the employee retention tax credits, Section 199 Cap A, and other incentives as well.
Perfect. So as our company, so as a group, we saved over $100 million in tax savings last 15 years. 2021 alone, we saved over $9 million. So even your small company or mid-sized company, if you think those tax credits are only for larger company, there is opportunity out there. So we will talk about that. But before we jump into R&D tax credits, I just wanted to share one of the secrets I think a lot of our clients are taking seriously and be able to save taxes much better than other companies out there. So from our experiences, whenever we are looking at small to mid-sized firm, they're only relying on CPA, traditional CPA, and that's the only resources they have. But if you think back my Big Four career, many tax specialists or tax person is generally focused on one area. So if you're really good at filing tax return, that's all typically that's only thing they do. And R&D tax credit or tax incentive, Kayla and I, that's only thing we do for day in, day out. And I will talk about why that's very important, premises to have team around you. So just fun facts. So the US tax code has approximately 3.7 million words and 9,800 sections. And in addition to this, each state and local jurisdiction have their sets of own tax rules and regulation. And moreover, all these tax credit tax laws are changing or updated, typically yearly, but sometimes monthly. So I just want to give you like example. So employee retention tax credit, this is a really good example. They came out from like March 2020 under CARES Act during the COVID to help company retain employees. So since like, this code section or this type of tax credit was enacted in March 2020, there was actually more than 5 different changes. And most recent change was last November 15th, retroactively canceling the employee retention tax credit as of September 30th, 2021. So as you can see, like, tax law always changes, or there's updates, there's additional regulation, comes out. So it's really difficult for one person or one CPA to master all the taxes. So we always talk about our clients, or even my friends who are business owner, how important to have team around them, from bookkeeping service to controller level and CFO and tax preparer to somebody like us, to create team so that you can get most benefit from tax code or accounting. So, but still, my friends always ask me, why do I have to pay for you? Why can't we just rely on one CPAs? And I always say, let's talk about medical doctor, right? When you're sick, you may go to see family doctor, but let's say you have a chain of pain in your chest, your family doctor probably gonna refer you to cardiologist to make sure everything is okay. And let's say you have freckle in your face, and you're really concerned, you're probably gonna go dermatologist. And when you have a baby, instead of going to family doctor, you're probably gonna go see pediatrician. So you do, when you think about medical world, you don't think your family doctor should know everything and specializing in every aspect of your health. I always say, like medical doctor, taxes are so complex, so that it's really important for you to have family doctor who is your CPA, traditional CPA, and then specialists around you to really take full advantage of your tax code. So I will go through what is R&D tax credit next, and I will take a question later, but if you have any question during this time, please jump in, ask a question. So just overview of R&D tax credit. So R&D tax credit was enacted in early 80s to encourage company to retain research and development activity in US soil. So it was a temporary credit from 80s to 2016, and back in 2016, Congress said this is a great credit. We want to make sure it is permanent credit in the US. So federal credits, as long as you are doing R&D activity annually, you can take these credits. And also currently, 35 states allow R&D tax credits. And if you're located in California, they allow tax credit as well. So what is R&D tax credit? So any company who are developing or improving product or process and who fits the 4-part test, you may qualify for R&D tax credits. So I'll go through 4-part test, 4-part test, but Congress wanted to make sure this is kept very general and very inclusive, so that if companies are doing those activities, they can take advantage of despite of industry. So number 1 is permitted purposes. What does that mean? Is the activity you're doing needs to relate it to new or improved business components like functionality, performance, reliability, and ultimate quality. And second and third goes hand in hand. So second one is elimination of uncertainty. So meaning that onset of the project, you must have uncertainty. And then number three is how to eliminate that uncertainty through experimentation. And it could be very formal and scientific to very informal. So oftentimes we will see is modeling, simulation, or systematic trial and error, iteration of your design and so forth. And last but not least is technological in nature, meaning that activity performance must be fundamentally rely on hard science, meaning physics, biological science, engineering, computer science, architect, and so forth. So social study won't qualify for these, but we have to fit it into this hard science. So next is what are qualifying costs? So three big things. So first is W-2 wages, meaning that employees' wages who are involved in the R&D activities, who fit that 4-part test, they will qualify. Second, typically biggest one is 1099 contractors fee. So that's one. And then the last one is supplies. Supplies, we need to be a little bit careful because supply needs to be consumed in the R&D activities. So those are the three costs potentially qualify. So instead of going through detail, I thought I will give you case study. So I prepared three of them. Two are related to architecture and engineering firm, and one of them I throw in information technology, but there's a reason, so I will go through that. So first case study, this is the landscape architecture company headquartered in Southern California, and their small company was less than $3 million in annual revenue. At the end of 2021, they had about 25 full-time employees. So whenever we got connected with them, we were connected through a fractional CFO firm, and they were working closely with local CPA firm, and the CPA firm didn't feel this landscape architectural firm would qualify for R&D. But CFO, fractional CFO thought they may, so we got involved. So whenever we get engaged with our clients, we always do onboarding process to really understand their businesses, right? So during onboarding process, what we always go through is what is your past activities, looking at numbers and looking at your just operation, and what are you doing today, and what's your growth plan? And these are for us to identify potential federal and state program, including statutory and pre-certified or negotiate tax credits. And we will prioritize those credits and start working with them. So first credit, we identified was R&D tax credits. So as a landscape architectural firm, company is always developing and improving product and business processes. Especially this company, they do custom builds, and there's no same builds they're typically doing. So we have interviewed all the employees and key engineers and architects in this firm and identify they will qualify for tax credit. So we've been working with them since 2020, but last year, 2021 tax credit was about $140,000 for both federal level and then state level. And then once we are done with those first priority credits, we went through and identify additional tax credits. So as I mentioned like previously, like, during COVID, Congress came out to tax credit called employee retention tax credits to help companies who are retaining any employees during like, COVID. And there was two tests, like, you can look at gross receipt drop or shutdown rule to identify or qualify your company. So this company previously like thought like, they weren't qualified because they received PPP loan and also they're in essential businesses. However, as a team, we reviewed the law changes in December 2020 and also like additional IRS guideline so that we can like, they can tell us like, what their operation was like in COVID. And we were able to qualify them for ERC using both gross receipt test and shutdown rule. So we were able to produce about $436,000 from tax credit from second quarter 2020 through third quarter 2021. So as of today, these are the tax credit we have, as working with them, like, they've been seeing. So first one being like employee retention tax credit for $436,000. And then annually, they are taking advantage of R&D tax credits. 2021 one was $140,000. And currently, they are actually growing massively. So we have just submitted California Competes tax credits, and we just went through the first stage of tax credit, and we are asking for $240,000. Okay, so second case study, this is a service as software company, and that company was established in 2015. And within the short time frame, they grew from 5 people to 60 people company within five years. And since the inception of the company, they never had an income. They're still in a loss position. So back in 2017, we got connected. They were working closely with CPA firm, and they didn't think like, they will qualify for the R&D tax credit because there's no income taxes. So as our always like our processes, like we go through the onboarding process to really understand what happened, what's happening, and like, what your company looks like. And also during the time, we always sit down with our clients and their CPA or fractional CFO or their internal accounting team to really understand company overview. So during that time, we identified they may qualify for R&D tax credits, because in 2015, there was a law change in the R&D. So traditionally, R&D tax credit, you can only use against income taxes. But this PATH Act in 2015 allowed small startup company to take the R&D tax credit against payroll taxes. So looking at the fact, looking at like, their activities, interviewing all employees, and like, really thinking, really understanding their project, we were able to qualify them for like initial year about $200,000 of tax credits. So since we've been working together, we have produced 1.7 million total credit from 2017 through 2020. And of which about $500,000 was they were able to take against payroll taxes, although they didn't have an income tax. So even you don't have an income taxes, there might be an opportunity for you to get R&D tax credits. So take a look at that. So this is our result today. So last one, we will stop this after this case study. So they are electrical engineering firm in middle of California, and their revenue is less than $2 million in revenue in 2021. And end of 2021, they had 9 employees, and they are S corporation. So they've been working with like, bookkeeping firm and CPA firm, and like, they've been like telling them about R&D tax credits, and they really encourage clients to like, pursue R&D tax credit, but they didn't know who to reach out to or like what to do. And the owner also thought because they're S corporation, they cannot take advantage of R&D tax credit, which is not true. So I will skip this, but like, as we go through like onboarding process, we are always looking at what are they doing right now and what's their past activities and future activities, and identifying like, different type of like tax program. So first one, we just got engaged by this company in January, so we are still computing tax credits, but so company is developing and improving product and process and business process all day long. And then also their project is always relying on engineering, electrical engineering. So their company and like businesses and activities were perfectly fit for like R&D activities. So along the R&D tax computation part, like, Caitlin can talk about this later, but we interviewed key personnel who knows the project and what all the employees doing. So after interviewing and quantifying who does what and like what percentage of like, people's time would qualify for R&D activities, we were able to produce $83,000 of tax credits. And we also looked at like, last 3 years. So in federal, you have 3-year tax deduction, meaning you have 3 years to like, amend tax return and claim those credits. So last 3 years, we have produced 260K for tax credits. And in addition to that, we also looked at different type of tax credit and like, they qualify employee retention tax credits. So we produced about $35,000 of tax credit for them. And as we are wrapping up like R&D tax credit, employee retention tax credits right now, we are going to see what else out there. But today, as of today, like our results is 345,000 in R&D tax credits, and that's an annual credit. So as long as they continue their operation and utilizing electrical engineering to do their job, they may qualify for that credits. And then employee retention tax credit, we were able to produce $35,000 of tax credits. So that's all our presentation for today. And Nolan and like I and Kaylin like reserved this time to like answer any questions. This is like, you can visit our website to learn more about R&D tax credits or different type of tax credits. Or if you're interested, please book a call utilizing that QR code.
Hey, Yuko, can I jump in with a question?
Yes.
So in the example that you gave for the SaaS company, they're not profitable yet. You've applied 500,000 towards payroll tax. So what happens with the other 1.2 million that you have? Does that go against future income tax? How does that work?
Correct. It's gonna go towards like, it's carrying forward to future income taxes like they may produce. Typically, as a firm, like, unless they know for sure they're gonna be profitable in near future, we do not recommend like overproducing R&D tax credit. But this company is very confident that they're gonna be profitable in like, next 2 to 3 years. So they choose to calculate R&D tax credit year over year.
Got it.
Any other question?
I have a question.
Sure.
Do the credits relate to employees or companies that have, do you have to have a certain number of employees to have this credit be applicable? Or say in the case, I know this is a little bit of a stretch, but let's say you have multiple partnerships in different businesses, or more of an investment nature, and you're hiring consultants. Does that impact the credit at all? Like they're not actually on your payroll, but they're other individuals that come together for a project. Let's put it that way.
Mm-hmm.
Yeah,
Yeah. Go
I
ahead.
can answer that.
Perfect.
And it's not letting me turn my video on, unfortunately.
Yeah, me neither here.
But yes, I can answer that. So the R&D credit is more of a wage-based credit. So if you do have employees, you're likely to have a higher credit. However, there is no limitation for like number of employees that you have to take the credit. And we have, we definitely have clients that do not have employees. They only have 1099 contractors.
Okay.
And you will be able to receive a credit through paying those contractors. There's just that, there's a 65% haircut on what you are paying those contractors. So
Okay.
your credit will be a little bit lower than if those were W-2'd employees. However, you can absolutely still claim that credit. And then as far as partnerships, we just have to, look at the contracts that you have with those partners and make sure that you have the rights to the products, the R&D products that are being made, and that you have the financial risk for those as well.
Can the group tell me a little more about what those, you just said R&D, can you define that a little bit more?
Research and development.
Yeah, tell me what the parameters of that activity are a little bit more.
Yeah, so that goes back to the 4-part test that Yuko had pulled up in the presentation.
Right.
Yuko, do you mind pulling that up again?
Yes. Hold on 1 second, please. Here you go.
So it has to meet certain criteria.
Yeah, so you have to meet all of these 4 parts.
All 4.
To qualify.
Okay.
Yeah.
Okay, got it.
And first one is just creating a new product or enhancing an existing product or process. 2 is there has to be uncertainty at the onset of the project as to the capability, methodology, or appropriate design of the product or process. So a lot of times companies know that they're capable of doing something. Maybe they just don't know the right method of going about it. How are we going to get from point A to point B, or what the ultimate design is going to look like at the end of the day. And then 3 is overcoming that uncertainty through a process of experimentation. So there we see a lot of systematic trial and error, modeling, computer simulation. Some companies will even do like mock-ups or prototyping, or actual traditional testing, testing for hardness, chemical compounds, things like that nature. And then 4 is technological in nature, which just means all of these need to be relying on a hard science. So a lot of engineering, computer engineering, physical, biological, chemical science. Any questions there?
Hey, Kaylin, I'm going to jump in with a question here. Are there any one of those that are typically kind of a barrier than others, or are they all pretty equal?
Right. So I would say the uncertainty portion is something, that needs to be proven out. And especially, in construction, you're doing a lot of that design work on the front end. And then usually when you start the actual project, start actually building and doing that construction, that uncertainty you guys have already, vetted. You've already done design work, gone through multiple iterations, figured out what is going to work and what isn't going to work, right? So at that point in time, you can take everything for the R&D credit, all of the time that you are working on until that uncertainty is vetted and is no longer uncertain anymore.
So as soon as the path forward, either in specifications or in some documented bid package or what have you,
right,
is done, you're in play, right? Until
right.
that.
Okay. Exactly. And a lot of times, I had a client that was working on a construction of a new mill for their company. They were milling wheat. But this new mill was state of the art. They were going to be having trains bringing in wheat. They were going to be using, it was on the water, and they were going to be using, water turbine power. So even during the construction phase and when they started building this out, there was still a lot of uncertainty there. So even during when they were building that and building things out, they were still making design changes throughout. So we were still able to take a lot of that time and effort and materials that were going into the construction phase of that project. However, normally that's, vetted beforehand. But since this was, very state of the art, very brand new. And one thing that I will say is that, the products that you're making or the, building construction that you guys are making does not have to be new to this world, you just have to be meeting these 4 parts and going through that, design phase.
Thank you.
Any other questions?
And then I guess, okay, one more. Who vets these 4-part tests? In other words, what's the test? What's the screening of that? Is that just an opinion, an accounting opinion, and you guys have done enough of these to know this meets it or doesn't meet it, or how do you?
Yeah. So, and that is really where we come in. What we do is educate on this 4-part test, and then we'll hear from our clients and hear about the products and projects that they have been working on.
Okay.
Make sure that, this meets those 4 parts. And then, help you guys determine what you guys are allowed to take and quantify for the credit, and what it would no longer be R&D anymore. And one of the great things that, working with us, we'll do all of that for you, and we will come up with our procedures memo and write out our narrative of your project, why it qualifies. And you all have everything that you need to substantiate the credits that you took.
Okay, thank you.
Absolutely.
I think that brings up a curiosity question. How much pushback do you get? How often does that happen? Does it happen a lot? Is it pretty infrequent? Does the narrative typically explain it and it's fine? Can you kind of give a little context around that?
I would say that it is pretty infrequent that you are audited on the R&D credit. But however, if you are being audited, we will provide consulting services for that, and we'll be, reaching out to the IRS and helping you to substantiate these credits as well.
Yeah, just to add, Nolan, from my experiences, like whenever you go through the audit, like it really like depends on like, how good is your supporting documents are. So we do as a firm, like we do like our best to like documents, and then like we gather like, any documentation from our clients to show that uncertainty existed and like how they overcome those uncertainty. Like we will document that, so we will do our best to like support like 100% of the claim, but depends on the agent and agencies. Sometimes like there are pushback, but it's our job to navigate that through for our clients.
Got it.
Any other questions?
Has this been around a long time, or I forgot that slide. You said this credit's been around since when?
81.
81. Okay.
Yeah. And I believe, if I remember correctly, this is like a little bit like old like stat, but I believe about 40 or 50 billion dollars of like tax credit, like R&D tax credits are taken by different industry every year.
Mm-hmm.
Well, it looks like we got through everyone's questions. Thank you guys so much. It seems like definitely helped out a few people today, so we really appreciate it. And like I mentioned, we'll definitely share this with people who registered on our YouTube page, and we'll share it with people later on this year as well. If there's no other questions, we'll say goodbye, and I hope everyone has a great rest of the day.